Welcome to the Money GPS. You came here for the truth, so let me unveil that for you. People are generally worried about what will happen to the retirement accounts. What's going to happen with inflation going so hot right now? Well, that's what we will get into today. I'm going to show you something that's happening within the pension funds that should worry everyone. But even if you're nowhere near retirement, you need to know what's happening here because it gives us a little insight as to what's happening in the financial system. I'm going to show you, of course, so much more. Stay with me. Pension funds plunge into riskier bets just as markets are struggling. More public pension plans than ever are using leverage, investing borrowed money in an effort to earn higher returns and close big funding gaps. I have been highlighting what's going on with this situation for years. If you've been on the channel for a while, you know the extensive coverage related to pension funds. They're not all struggling. They're not all an issue, but in general, they've got problems. Why? Because they had to pay out so much. They simply cannot make ends meet. And slowly but surely, these dwindle. And that's a big problem, not for the people getting paid out today, maybe, but the ones who have to get paid later. And they always just simply kick the can down the road. But is that a good strategy? Probably not. The next financial hammer to fall, public pension funds. So in here, they basically cover more of that. And they gave a little bit of detail that, you can see right here. Historically, public pension funds invested very conservatively to minimize risk and ensure that they had the funds to meet their retirees' needs. And while most public pension funds still don't use leveraged, some of the largest ones are taking that step. The Teacher Retirement System of Texas, the country's fifth largest public pension fund, started using leveraged funds in 2019. And roughly $440 billion of California's public employees retirement system has voted to start next month. Okay, it goes on. But that's what's going on here today. And you are essentially saying, hey, you can deal with this money and I'll sit back and I'll wait. Because this happens without your intervention. You can't change that. Okay? And they might be doing something you don't want to do, you think is irresponsible, but they're doing it anyway. And it's just me saying this. I believe there will be a day when they simply cannot give people what they're expecting to get. And I'm meaning this sort of broadly. What happened with, I think it was the previous governor of California, I've said this many times, that when the next crisis happens, major crisis happens, that they will have to slash the public pension funds. And I have noted different pension funds over the years and what they had been, slashing by. In some instances, it's 30%. Okay, and that's just the average. So what could possibly happen? I mean, it is very worrisome because people rely on it. Now here, Canada tightens rules on riskiest revolver-tied mortgages. You got to see this. Now, obviously, Canada is a place that people really, really went overboard on the amount of debt that they would take on as a mortgage. But this is interesting. Canada's banking regulator moved to rein in a number of home loan products that have exploded in popularity during the country's two years ago. I don't want to say that word. Housing boom as the market starts to turn. Consumers who hold mortgages that are combined with a revolving home equity line of credit and exceed a 65% loan-to-value ratio must use some of their principal payments to pay down their mortgage balance until it's below that threshold. And you might be thinking, okay, well, I mean, how many people is this really going to affect? The rule change targets loans totaling 158 billion US dollars, or 11% of the total residential mortgages outstanding. 11%, ladies and gentlemen. That's a big number. That's a significant number that are suddenly going to have to be putting more money to pay down the debt than they were doing previously. And instead of paying down, or buying stuff. So that means a slower economy in general. But that's a good thing. You want to slow this down. You want to slow the purchasing of goods down in a sense, but doing so creates problems. Certainly does, right? Now, I've talked about the food supply many times, and I wanted to note this. I mentioned to one of the subscribers that it would. East Tennessee food processing plant closing, 200 jobs lost. We've seen all these different food processing plants that have gone up in flames over basically the last year. And now we have another food processing plant. Why? Inflation, wages, and, input costs and so on. This is going on everywhere. Inflation is going up like crazy. And that brings me into the next chapter, because you see the security of the US dollar monopoly currency diminishing. And it is most notable with anything to do with China. But this is interesting. Iran and Argentina seek BRICS membership. Now, Iran, I could see, okay? Argentina, to me, that's a curveball. So what we are watching today is China leading the charge into doing away with the US dollar. And all of this time, we have been relying on the US consumer to buy up everything, okay, to be the sort of engine of growth. And at the same time, we expect to see foreign institutions, foreign governments, foreign investors buying up the debt of the US. Having that reserve currency continues to keep things moving as well. There's many levels here. But China is basically saying, hey, do you like the fact that they're always in charge, that they make the rules, that they can break down the walls and build them up whenever they desire? Or do you want to diversify? Come with us. And so this is starting to happen with many different strategies, many different levels, different countries. All along, we are watching China growing in strength. It is very interesting, to say the least. At the BRICS summit, China sets the stage to tout its governance model. Quote, non-Western styles, forms, and principles. They are clearly setting up for something much bigger. Russia's Putin and Brazil's Bolsonaro discuss global food security, basically saying, in particular, Russia said, we will continue to supply you with fertilizer. So that was mentioned on the call that they had. I wanted to bring that to you, again, to show you this alliance that's been very strong. And I wanted to point that out here. You could see that they're shaking hands. I don't see any thumbs up, but do I see any thumbs up from you? Make sure to hit that like button. I do appreciate it, okay? Tesla lays off about 200 autopilot workers in the latest cuts. If you remember what Elon Musk had said, basically, if you're not working on actually building the car, your job is at risk. Okay, not too many people. I mean, we do see this relatively frequently where companies or entire sectors will start to trim the fat, if you will. Those workers that are sleeping at their desk, the workers that are, like George Costanza under his desk, they're sleeping. It could be anything. But this regularly does happen. But when we start to see a much more broad view of that, well, then it's an issue. Consensus earnings estimates have stopped rising, but not yet started to decline. So the expectation here is that we've pulled out so much growth from all of this that companies do not have the juice to go on, especially when interest rates are moving up. This earnings margins will likely decline in 2023 even if a recession is avoided, and that is according to Goldman Sachs. So we don't know what's going to happen, obviously, but I think it's important for people to realize we've got inflation picking up. We've got the concern of recession. We watch what's going on with tighter financial conditions and how that's creating a problem for this debt-based system that people rely on. And when the rules change and when there are obstacles in the way, doesn't it affect a lot of people? Absolutely. So what you can do as an individual is pay down your high interest debt first. How can you do that? Well, I would highly advise people to get a skill that pays money. Now, it doesn't have to be a billionaire, but certainly something that pays cash. A lot of these skills, you can learn them online. I take paid courses all the time. All the time. I learn so much from them, okay? That's just the way it is. But you can learn for free on YouTube. You can learn for free on many different websites. I covered more recently where there's websites that you can get the top schools in the world teaching robotics, AI, automation, programming, everything that you would need to know. Whatever it is that suits you, get on that. Okay, this is really important right now more than ever. If you appreciated this information, hit that thumbs up button and don't forget to join the 282,000 subscribers here on the channel. I'll see you on the next one. Take care.